The whispers have grown louder, and now they're a roar. Central banks globally are embarking on an unprecedented gold buying spree, reshaping the very foundations of our financial world. But why are they doing it? And what does this mean for the undisputed king of currencies, the US dollar? For decades, the US dollar has been the bedrock of global finance, the primary reserve currency, the lubricant for international trade. But a silent revolution is underway, driven by geopolitical tremors and economic shifts. In 2024, central banks bought over 1,000 tons of gold, a record-breaking year. This insatiable appetite has continued into 2025, with massive purchases reported, pushing total central bank holdings beyond 36,000 tons. And here's the kicker. For the first time since 1996, the value of foreign central banks' gold reserves has now officially surpassed their holdings of U.S. Treasury securities. Gold has reclaimed its position as the second largest reserve asset after the dollar. This isn't just about diversification, it's a strategic pivot. Nations like Poland, Turkey, India, and China are leading the charge, systematically reducing their exposure to USD-denominated assets. The primary catalyst? Geopolitical risk. The 2022 sanctions on Russia's dollar reserves served as a stark warning. Currency reserves can be frozen or weaponized. Gold, being a non-sovereign asset, offers unparalleled protection against such risks. This movement, often termed de-dollarization, is seen as a structural, long-term trend rather than a cyclical fluctuation. It reflects a fundamental reassessment of reserve adequacy and composition in an increasingly multipolar world. Historically, the Bretton Woods system cemented the dollar's role, backed by gold until 1971. The subsequent shift to a fiat system, coupled with the rise of the petrodollar, further solidified its dominance. But every empire faces challengers. Consider the 1970s oil shocks and the subsequent rise of the petrodollar. Nations needed dollars to buy oil, reinforcing its global demand. Yet even then, the underlying vulnerability of a single currency dominant system was evident to some. Today's framework is complex. Geopolitical fragmentation, concerns over sovereign debt levels, and the pursuit of monetary sovereignty are driving nations to diversify. Gold provides a neutral, liquid, and non-counterparty risk asset. The dollar's share of global currency reserves dipped to 57.7% in Q1 2025, a marginal but persistent decline from the end of 2024. The euro has seen slight gains, while the renminbi's share has fluctuated. This isn't a dollar collapse, but a gradual rebalancing. Forecasts for 2026 suggest a weaker US dollar, with major banks projecting a gradual easing in the dollar index towards the low 90s. What's fueling this 2026 outlook? Expected Fed rate easing, narrowing interest rate spreads with other major economies, recovering global growth outside the US, and ongoing US fiscal and policy uncertainty. Looking ahead to 2026, Goldman Sachs is bullish on gold, forecasting it could surge to $4,900 an ounce, driven by sustained central bank buying and increased private sector interest in diversification. Who stands to gain? Gold-producing nations, central banks with high gold reserves, and economies prioritizing stable, non-sovereign assets. Emerging markets and BRICS plus nations are key players here. The losers could be those heavily reliant on the dollar, or countries with significant US Treasury holdings that see their value erode. While the dollar's dominance won't vanish overnight, its relative power is shifting. For investors, this means considering gold not just as an inflation hedge, but as a strategic portfolio diversifier. It's a signal to reevaluate traditional asset allocations in a world where monetary sovereignty is paramount. Understanding this ongoing rebalancing is crucial. While some argue that de-dollarization is a slow mirage, the data on central bank gold purchases and dollar forecasts for 2026 paint a clear picture of a world in transition. The era of unquestioned dollar supremacy might be slowly fading, giving way to a more multipolar monetary system. The question isn't if, but how quickly this financial landscape will evolve in 2026 and beyond. What do you think of this gold rush? Will the US dollar retain its global reserve status in the long run? Let us know in the comments below, and don't forget to like this video and subscribe for more deep dives into the global economy.